What's up, everybody? Welcome back to my stream. Today I want to talk about something very, very important because we might see a dump down. I found something on the charts that is very, very big that I want to talk about with you guys. But before that, I just want to say, leave a comment down below. What do you guys think I should name this episode? What I should name this series? What I should name this daily live stream that I do? Whatever you guys can come up with. Think about it. But anyway, without further ado, let's get straight into the stream because, first of all, I want to talk to you guys about Bitcoin real quick, just a little tiny bit, because an update from last stream, I talked about how if we confirm support at this level and pump farther than 30,400, making a higher high, we can go higher to about $33,000. And this is not finished yet. We can still confirm support at $29,300. And we can technically even fall some more because if I go on the hourly time frame, we see that we now have a sort of bull flag that can take us up to $30,000 because if we take a line from the bottom to this bull flag and drag it to where we are right now, the target area will be around $30,000. So if we break this blue resistance line, that will take us up to this white resistance line, which will be the biggest resistance for us because there is an indicator that shows that $30,000 is a huge resistance line. But we can see that we have not fully confirmed support. We are still trying to confirm support at this area, and we have more support because this is the Fibonacci retracement, a big indicator that shows us how far down we usually fall down to. And we usually fall down to about 0.5 to 0.618. And as you guys can see, this level is where we are right now. We are right now inside of these two pockets. We are inside something called the golden pocket. This is usually where Bitcoin falls down to, or anything falls down to, before it reverses and pumps up. And this would be the perfect time for us to reverse right now on the short term. On the short term, we look very, very bullish because if we break this blue line, we are going to 30,300. That will be a 3% pump. And after that, we will have to see if we break this level. If we break this level, well, then the next rise is very, very far. It's all the way up at $33,000. But if we get rejected off this level, that's already another question because then we will fall down to about $28,000 probably to confirm support at this blue line, at this red line, and at these two sideways lines. That doesn't necessarily mean that this is a failed confirmed support because we will still need to rise up and try to break above this line once again. And then this is where the problem comes. If we get rejected once we break down, if we get rejected right here and fall down once again, then that's probably a confirmation that we are not going to rise up. But other than that, as long as we stay inside of this channel and do not go lower than this blue line, we are fine. And if we break out to the upside of this blue line, on the short term, we look like we're going to rise up. But that's not what I want to talk about. You guys probably saw the title of this video. The title of this video is, Will NASDAQ Crash Bitcoin? And before I talk about how NASDAQ can crash Bitcoin, I just want to say that the reason I'm talking about NASDAQ is because Bitcoin is actually correlated to NASDAQ. Here's NASDAQ. This is a huge stock, one of the biggest actually, rivaling S&P 500. But Bitcoin follows both NASDAQ and S&P 500. The actual appropriate term is correlating. Bitcoin is correlating NASDAQ and other stocks. What do I mean by this? Well, actually, we can pull up Bitcoin and we can actually check on it. As you guys can see, NASDAQ is in red and green, and Bitcoin will be in blue and orange. That's what we're going to see. That's how we can differentiate two of these stocks. And we can actually see that when NASDAQ would confirm support at some level, Bitcoin would follow a little tiny bit later. When NASDAQ would start rising at the level, Bitcoin would follow. And same thing for this pump, same thing for this pump, same thing for this huge peak right over here. Bitcoin would follow NASDAQ. What do I mean by Bitcoin's following NASDAQ? Well, the reason Bitcoin is following NASDAQ is for two very simple reasons. Number one, traders, when they are trading, do not realize the difference between crypto and stocks, and so they buy in. They buy in to, for example, a stock, and they say, hey, let's put some money into something that's a little bit riskier, a little bit more volatile, something that could rise up more but fall down faster. And so they buy over here, for example, both of these things, or they sell over here, both of these things. But Bitcoin usually falls down first for one big reason. The reason Bitcoin usually falls down first and NASDAQ follows Bitcoin is because when traders decide to sell because, for example, something's crashing, they first sell the most riskiest stuff. First riskiest stuff is altcoins. Second riskiest stuff is Bitcoin. And the third riskiest stuff is NASDAQ and other stocks, specifically tech stocks. So those are one of the first things to go. And Bitcoin follows tech stocks, which means Bitcoin falls down. So all of these stuff, all the stocks in crypto are kind of moving together just because people do not understand the difference between crypto and stocks. Once people will understand the difference between crypto and stocks, that is when Bitcoin will fly up and NASDAQ, for example, will fall down. The reason I think Bitcoin will fly up and NASDAQ will fall down is because NASDAQ follows the dollar. If inflation starts rising up, everything starts getting more expensive, company starts raising its consumer costs, and its stocks start rising up. But Bitcoin does not follow the dollar. That means that if the dollar crashes, NASDAQ will fall. But since we are moving to with the NASDAQ, we will have to make a decision. Do we break away from the NASDAQ or do we follow the dollar? If the dollar crashes, we will most likely break from the NASDAQ because NASDAQ stock will fall because the dollar crashes, but Bitcoin goes against the dollar because it's not part of the dollar, which means it'll continue to rise up. And once it does, that's the biggest goal for crypto, is to not be correlated with stocks. If we stay with stocks, that means we are kind of being a little bit controlled by stocks. But once we break free from stocks, then that is when the true glory shines. But that's not what I want to talk about. I want to talk about how NASDAQ could fall. And because Bitcoin is correlated to NASDAQ, technically Bitcoin could fall. So NASDAQ is very interesting right now. It actually has been going up just been going up a ton. And we only fell down. We had this one big crash right over here, and that was the COVID crash that caused us to fall all the way back down to $10,000. And after that, we continued to rise up. It's funny how Nasdaq continues to just rise up, seemingly not stopping anywhere. Actually, this is the huge COVID crash, my bad. And this is the recent crash in 2022 that caused Bitcoin and everything else to crash. We all fell. But the crash from COVID was right over here. It looked small, it was 30%. And this crash right over here was 36%. So it does about 40% falls before continuing to rise up. What I want to talk about is the fact that we confirmed support at this level and started to rise up. And now we could be confirming resistance. This confirmation of resistance is big because, as you can see, we started falling right over here. Stocks can't go on, just like everything else, stocks cannot go on forever. And what this means is that we need to have periods of dumps or periods of consolidation before we continue to rise up. We need to basically, when we're swimming super, super hard, we need to catch our breath to continue swimming more. And so we will probably, NASDAQ cannot go on forever. It sometimes makes 10% dumps, sometimes makes 15% falls, and 30% falls usually happen in some kind of recession. And if this is the point of breaking and we start falling down about 10%, well, then we could fall all the way down to around $14,000 from $15,700 where we are. Why am I saying this? Well, I'm saying that we could fall down, and that's going to cause Bitcoin to fall down because we're correlated. But you might tell me that, oh, you can't just say that we're going to fall down because of one trend line. That's not enough data. Well, we do have indicators that are showing that we are super oversold. We actually rose a ton. And you can see that back over here. We reach a certain peak, and then once we break out of the peak, we fall down. And this is called the RSI. The RSI is a huge indicator that shows when we're oversold or overbought. And you can see that right at the peak, we're super, super high. And once we broke past this line back down, we fell all the way down to about 30, which was this 30% crash back in the recession. And only through recessions do we actually reach the bottom of this RSI on the weekly time frame, which is very, very interesting. But you can see that we are back at the top. Now, last time we actually stayed at the top for a while, and you can see that we do sometimes go down, but go back up. But what I want to talk about is the RSI on the weekly time frame, because we are super, super close to reach this level once again. That usually when we reach this level, the RSI reverses and causes us to fall down. And this other indicator called the stochastic RSI is one big indicator that when this blue line flips underneath the stochastic RSI, all this means is that this could technically be a fall down, but we need to have two things to happen for this indicator. One, the red must go above the blue, and two, we need to break below this line, which is what we did right over here. What we did right over here on the monthly time frame. So if we confirm resistance right now on this line, it could cause the RSI to have just enough momentum to fall right down. It could have this indicator, the stochastic RSI, just enough momentum to reach below this line. And if we do fall below this line, well, technically, we could see a fall down to around this level, which is $13,000, because we will probably fall down to a moving average. Now, this doesn't necessarily mean that Bitcoin will crash, and doesn't necessarily mean that there's going to be a bear market, but on the midterm, Bitcoin does look a little bit bearish because of the amount of percentage we rose up. But this is not 100% true. NASDAQ can continue to rise, or Bitcoin can decouple. So there are a ton of data points that I talked about last streams and how Bitcoin could rise up. But of course, we do have to look at the opposite side and say that there is a chance for Bitcoin to fall down in the short term. But there is actually even more bullish news. Talking about ETFs. I've been talking about ETFs for a while now. ETFs are a major, big bullish thing that could happen, because an ETF allows for Bitcoin to spread out. It allows Bitcoin to be much more widely here. It allows Bitcoin to be used by much more people, because it allows Bitcoin to basically be at the stock market level. Because the ETF, what an ETF is basically a big pool of money that could come into that runs on the stock market. And there's a big scary company called the SEC, which approves all these different ETFs to be on the stock market. Now, when the first company called BlackRock came out with the SEC was a couple months ago, BlackRock rejected them because they said that it was gonna be very, very easily manipulated by the market. They were scared how people could easily grab and buy Bitcoin instead of on the crypto market. They could buy them on this ETF, and since, for example, they could BlackRock could, for example, inflate and tell people that they have more Bitcoin than they actually do. Once people try to get it out, it could cause a ton of chaos. It's just very insecure. So what people started doing, what companies started doing after BlackRock got rejected and other companies started rejected, is they started refiling. So Global X, another company that's trying to file an ETF, also refiled the ETF. And what I want to focus on is the fact that they are using Coinbase as their surveillance sharing partner. So what all these fancy words are that you got to understand is that this company is rejecting all these ETFs, all these Bitcoin stocks, essentially, because they're not safe. And these companies, there are about 7, 8, 9, 10 different companies that want to get a Bitcoin ETF. They are coming back to this SEC and saying that now we got Coinbase, an amazing crypto exchange, as our surveillance partner, which will help us be more secure. Global Exodus, Fidelity did this, and Valkyrie also did this, and BlackRock did this. All these companies are also doing this because they get rejected because they're not safe enough, and so they decide to create a new thing. And many people are saying that because they keep refiling and they can keep tweaking this as much as they want, many people say that it's not a matter of if, it's a matter of when. When will it happen? And most people are saying 4 to 6 months. So many people believe that ETFs will come out. What I want to talk about is the fact that if an ETF does come out, if ETFs, all of these ETFs come out, it will cause Bitcoin to be in the bull market. And this is why, compared to this one little indicator, the stock market, there are about 50 different indicators that could tell Bitcoin to rise up in the long term. This ETFs that could cause Bitcoin to get bought by much more people on the stock market. This rising channel that goes to $34,000. It's a much bigger chance for us to rise up. It's all about risk, guys. And the biggest pivot point is right now on the short term. All we got to do is check for this. Now, you guys can ask the questions in the chat. I actually have a lot of questions that many people ask, so I will answer these questions while I wait. If anybody has any questions, just feel free to write them in the chat. A person in the last stream decided to write and I missed their chat, but they asked, can you explain how the fear and greed indicator works? Which, by the way, we can look at the fear and greed. The fear and greed is a very cool index. It's a very cool indicator. It's another indicator that we can use to know whether Bitcoin is rising up or falling down in the short term. Right now it is neutral, and that is because people can't decide if they're fearful or greedy. Like I said already, there's the pivot point right now. Right now there's so much tension growing in crypto that will cause something crazy to happen. It's like a twig being bent, and at some point it's about to snap, and once it does, something crazy will happen. If we break below, well, we could see us following NASDAQ to fall. But if we confirm support, we can see the rise up super high to $34,000. Now, how the fear and greed indicator works is written down over here. They actually write in their data sources. All it is just a combination of sources that can contribute to knowing whether Bitcoin is fearful or greedy. They use a ton of different methods, a ton of different indicators to know whether people are scared or people are greedy for Bitcoin. So we can look at this. They actually write them down over here. They use volatility, market momentum or volume, social media, dominance, and trends. So we can start from the top. Volatility, very big thing. Volatility is very important for Bitcoin. All it means is that, if I can open it, it's an indicator that shows how much Bitcoin is being bought or sold. It's showing how much money is going into Bitcoin or leaving Bitcoin. We can actually use this indicator to know when breakouts happen, because we can know when there are big changes in price, buying action or selling action. You can see all these spikes in Bitcoin were when Bitcoin was flying up. And right over here also. And we can use this volume as an indicator to know when we are going to break out, because we are now following a sort of trend down inside of this indicator, and when the volume will break out, when the volume will spike out, that's when we know that the spike will happen for this pump. That's when we know this pump will happen. Until we continue this downward trend in the volume, we cannot break out of this indicator. But once we do, that's something crazy. This is one of the best indicators to know when people are fearful or greedy, because we see how much Bitcoin is actually coming in. That's why it takes up 25% of the market, this data source. The other 25% is actually taken up by volatility. All this volatility means is Bitcoin is either falling down or rising up super far. The bigger these price jumps are, the bigger people are probably buying or selling. That's another indicator. That's another price point that they use. Volatility. How fast is something rising up or falling down? And what my favorite thing is the fact that they have social media as one of their medias for this indicator. They look for hashtags and stuff on social media that, for example, say hashtag sell, and some kind of comment is saying that we need to sell Bitcoin for this specific reason, or not just Bitcoin. This is actually for the whole entire crypto. They check a ton of price points on a ton of different kind of cryptocurrencies like Bitcoin, Ethereum, Monero, and so many more. And they look at social media. It takes up 15%. Surveys is paused. I actually am not sure what surveys are, and they are currently paused, so it doesn't really matter. And another indicator is dominance. Now, what dominance is it's basically, we can actually pull up a chart. It's basically how many coins, how many people are in Bitcoin compared to other altcoins. Now, what this could mean is that, for example, people are super greedy or super knowing, for example, they know that Bitcoin will, for example, rise up, and so they invest their money into a riskier asset like altcoins. Altcoins are riskier assets than Bitcoin. Bitcoin is a bit more steady, it doesn't go that far. So when people are in assets like altcoins, they are showing that they are much more comfortable and they think that Bitcoin's going to rise up, basically showing greed. But when the Bitcoin dominance spikes up and people enter Bitcoin, that basically says that people are trying to enter much more comfortable assets that they know are not going to fall down as much. So you can see that back over here, people used to be 90% in Bitcoin just because Bitcoin was one of the only cryptos that was safe. And then at 2017, Bitcoin actually, other cryptocurrencies came out and it fell down very, very massively. And these price pumps and dumps actually show altcoin markets. You can see 2018 was the bottom of this Bitcoin recession, and the Bitcoin dominance kept rising up until September of 2019, which if we go to Bitcoin, I go on the daily time frame and we go back to September of 2019. September of 2019 was right over here. Right over, if I can find it, right over here. And the reason that Bitcoin dominance fell right after September of 2019 is because people still believed that Bitcoin was going to rise up right after here. And then right over here, we fell. And that's when Bitcoin dominance crashed. So that's another point for how Bitcoin dominance works. And then last but not least, trends. Super simple. They also track when Bitcoin is going to break, for example, a support line or a resistance line, and once it does, well, they know that Bitcoin will probably be more fearful because we just broke another trend. That is how the fear and greed index works. All they do is combine multiple different things together. They combine volume, volatility, social media, hashtags, dominance, and the trends. Another person asked, when is the right time to buy Bitcoin and what should I look for? Well, there's a very simple explanation. The best time was about 10 years ago, back when Bitcoin was around 500 bucks. But the second best time is right now. Right now, Bitcoin is at the perfect place to buy. The Bitcoin just dumped from $69,000 all the way down to 15. The second best time to buy was right here. And the third best time is to buy right over here, because if you are investing for the long term, not trading, if you are investing and plan to hold Bitcoin for about 2, 3, 4 years, well, Bitcoin will rise to all-time highs. Once again, Bitcoin will rise to 69,000 and break it. It will make a new cycle in 2, 3, 4 years. Keyword is 2, 3, 4 years. This is not an easy Bitcoin doubling machine. This is not a place where you can come in and 100% walk out with triple your money. You have a big chance of Bitcoin falling down in the short term, but the longer you hold your Bitcoin, the bigger chance of you having double, triple in the long term. And the question is, how long are you going to hold? So if you have reasonable amount of cash or a reasonable amount of money that you want to invest and you hold it for 2, 3, 4 years, I suggest just turning off Bitcoin, not looking at it for 2, 3, 4 years and checking up on it after that, so that you don't want to sell if Bitcoin drops. But 2, 3, 4 years is 100% you will be making money. But that's for investing. For trading, you'll actually have to buy. You'll actually have to train yourself, because this is not that simple. You have to train your mind. You have to train how to find indicators on the charts. It's not just simple as finding indicators. It actually also deals with emotion. But that's a very good question. Another person asked, if I put $50 in Bitcoin and make money, should I cash out? So the question is, if you buy Bitcoin right over here and they actually specify, should I cash out the money and put them in again to Bitcoin, or should I leave the money there? So they're wondering, for example, they buy Bitcoin over here and they make $30. Should they buy, or should they sell, or should they hold? So in my opinion, if you are making money, it widely depends. Are you going for investing? Are you trading daily, or are you trading swing? If you are trading daily, that means you're trying to make a real quick trade. For example, this pump that's about to happen right over here. If you are making this small trade right over here and you reach a specific level for you, there you go. You reach this level, you sell. You do not be like, I'm making some money, I will sell. That is all emotions, and you cannot trade on emotions. You have to look at different price points. So this question, it widely depends. If you're investing, of course you keep it longer. You're not going to sell right now with $30 because you know that in the future you will have triple your money, like $300 compared to that $50 that you had. You know that you're in here for at least a year, and so you're going to keep your money for at least a year. Of course you can take out $50 if you made 5,000. $50, your initial investment can go. And Oh, thank you. Thank you for the person who said the comment. I have a recollection of my spouse mentioning a situation where an 8-year-old was discussing Bitcoin. Your prospects shine with promise and success. Maintain your persistence. Thank you. And with that, I actually have no more questions, which is very, very interesting. Oh, speaking, perfect timing. Somebody asked a question. He asked if he is trading on the exchange Binance, and he's wondering if that's a good exchange. It is a good exchange if you are actively trading. So there are different security risks for different exchanges because these exchanges are basically online, which means that if you have a weak password, they can easily be stolen. So if you are investing, I suggest getting some kind of wallet, like a hardware wallet, which it never connects to the internet, so nobody can steal by hacking in through the internet. They need to physically have it and start cracking through it using Bitcoin, which is almost basically impossible. Another thing for exchanges is that you don't know your actual they don't give you the key for your money. They give you that email, and that means that technically if Binance crashes, for example, they might not give your money back. You heard that deal with FTX. They had this whole entire deal, they got sued, and half their people actually never got their money back just because they were in an exchange that was not safe. So if you're trading actively, of course, the more secure some kind of wallet is, the harder it is to actively trade. For example, buying leverage and selling. It's a bit hard, but if you're investing, you can put yourself into some kind of hardware wallet, or for example, Coinbase wallet, which is a very simple wallet that allows you to have control of your Bitcoin. But if you are trading actively, for example, on Bybit or Binance, all these exchanges are good, and all you got to do is look at the fees. Are you comfortable with their fees on margin trading? Is there a better alternative? Exchanges actually some exchanges actually allow you to have a ton more leverage than others. For example, Bybit gives you 100x leverage and BingX gives 150x leverage. Some actually require KYC. Most exchanges require you to actually give your driver's license, which means KYC. They ask for a ton of information because they don't want you to be some kind of scammer. That's Binance, Bybit, Kraken, so many of those exchanges. BingX does not require that. So if this is not sponsored, by the way, but BingX actually does not require. So it's a pretty good exchange. But very good question, guys. These are very good questions. And with that being said, I see no questions anymore. And I'll probably be ending the stream very, very soon. And with that being said, guys, leave a comment down below what you think this series should be called, because I do not know what to call this series every single day. I need a name. Should it be like, Ivan on Tech, he does like these Bitcoin series too. I forgot what he calls them. Good morning crypto. There you go. Thank you. But I do not know what to call this live stream. But with that being said, leave a like down below, guys. Smash that like button. I'll see you guys in the next stream. I'll see you. See ya.